We're back. Thanks for staying with us. Joined now by Karl Schilling. Karl is the founder of the Advocacy Network. Karl, always great to have you on the program.
Yeah, and it's always great to be here with you too, Don. Appreciate it.
Well, always appreciate your intelligence, your insight, and your advice. We live in some awfully difficult and strange times right now.
It is true, and sadly, I think that what we have to learn is that the fear and panic that people are now under, which, we won't get involved in all that, but it has a political overtone. But the fear and panic can cross over to other parts of your life, which can help really run you down the road to making bad decisions, especially financially. So we're in a very high inflationary period. Looks like we're going back into, me and you are old enough to have been there. Maybe some of your viewers didn't experience it, but we lived in the late 70s. Okay. We lived in the Jimmy Carter administration. So we saw a lot of this kind of thing. And in some cases, this is even, I'm not even sure how it could be, but in some places it's even worse because we weren't, back in that period of time, even with runaway inflation, we weren't looking at empty shelves.
Yeah. Well, fear is a method of control, and the government is establishing the fear, and the media is promoting it.
Yeah. And I think again, like I've always been a proponent, this, and I've always tried to tell people, stay away from the financial media. The financial media is probably not your friend because every time they tell you about getting involved in something, they're usually looking for people to liquidate. They're looking for people to buy them out, right? Last week, one of the big fund managers, the bond managers, and I won't name them, but one of the big bond managers started talking about it was such a great time to enter the bond market. This is the day after there had been one of the strongest liquidation points in the treasuries in the last 5 years, right? So he was saying it's a great time to buy, and I'm saying, don't buy that because he needs more buyers to liquidate.
Right. Well, I've always said, don't buy when everyone's buying, don't sell when everyone's selling.
Right. Because ultimately we're in a marketplace where invariably you're at the point of buying high in most asset bases, right? So you're buying high, which is going to leave you in a position in the future where your only choice is to sell low. And that's why I talk to people now about other ways, Don, like your audience is heavily involved in small cap companies and micro caps. And I think that may be a pretty reasonable market as long as you pick out companies you believe in, you really have strong faith in, and you're going to be with them long term for the ride, and you do a lot of due diligence to make sure that, it's a sound operation. But those are probably still underpriced.
Well, we've been on the air for 26 years. I've interviewed probably 5,000 business executives during that period of time. I've always looked for passion. I want to see passion in their company, passion in their business model. And when they can exhibit that passion in an interview, you get a high level of confidence in them.
Yeah, and I think also, I traveled when you and I first met. I was working for one of the IR firms nationally when we first met, and I had the opportunity. That IR firm had been doing a lot of business with Chinese companies, and I had the opportunity to travel to go to a lot of meetings. Take a lot of meetings with institutional, money to invest in the companies. And the thing I learned about that, Don, it was a great education because the institutional money, they weren't interested in why you were going to succeed. That was not the model. The model they wanted to hear was why you were going to fail. And if you had a handle on why you would fail and a good sense, you know what I mean? Not just pie in the sky and just, overzealousness. If you had a good sense of why you could or would fail, they'd invest in you. So it was counterintuitive thinking,
You're absolutely right, because if you don't know the pitfalls that you could be facing, the successes aren't going to come along that way.
Yeah. So a happy story is common. Everyone's got a happy story. They all got a wonderful reason why I'm going to succeed. But I think as an investor, for everybody, the key question is ask somebody, well, how could you fail and why would you fail? And if they got a handle on that, then you probably got a person that's really well set to succeed.
I throw a question at a lot of CEOs that I talk to about what's the biggest challenge you're facing. And I like to hear the answer to that question because it really says a lot about the company, says a lot about the management, says a lot about the leadership.
Yeah, and in this market especially, it doesn't make a difference the sector, I don't think. I mean, other than, okay, pharma, the pharma sector may be having somewhat of a run, right now, even early stage pharma, maybe because of what's going on. But there's going to be a lot of stories, about that. But if you follow the money right now, I think everything that's going on in just following the money, I think big pharma, has their hands in a lot of what's going on. So their role is to continue the pandemic, not end.
The politicians that are putting out mandates, vaccine mandates, they all own stock in the pharma companies that create the vaccines. So like you said, follow the money, you get the answers.
Yeah, it's the old adage, just follow the money and you can see, exactly what's going on. But that being said, I think it's a great time. Assets in the overall market, the big market, right? The big market, assets are overpriced. In the real estate market, assets are well overpriced. So we always talk to people about life insurance. You know that I always have that conversation. Life insurance as an asset, not life insurance as an investment. Never was, never will be. But that's a good place to hold money. A lot of people are moving into money. They're moving into cash, right? And if interest rates start to go up, you're going to see more people coming into cash, obviously, because CD rates will go up. People will have places to get more money on them, right? But you also got to think long term. You got to think long term. At some point, these markets will become underpriced. We talked about oil. It was great. You and I, what was that? Last February, right? Mm-hmm. We got to talk when oil was 39. We said, you and I both said on this show, oil would go into the 80s.
It did.
Right? And where are we?
Right there.
In the 80s. Now they're talking about potentially the hundreds. And by this summer, when demand comes up, heavy demand. I mean, we got winter demand now, but that's not really the same. You know what I mean? That's fuel. But when the summer demand comes up, people start traveling and everything again.
Yeah. And
no supply lines. So yes, oil could be 125. So again, I'm not telling people where to invest or what to do. I try to give people an eye on, counterintuitive thought and look at the future. But look at it counterintuitively. Don't look at it the way everyone tells you it's going to be, because there's too many people who have ulterior motives, in how it should or would be. They were not pushing us into oil about last February.
The Advocacy Network, Karl Schilling. Karl, it's always a pleasure having you in the program. Your insight is most valuable. Thanks for joining us again.
Thank you, Don. Appreciate your time. Say hey to all your listeners and followers.